Hello and welcome to Stocks Advisors channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. Today we will have a look at Marvell Technology Group Limited, traded at NASDAQ, ticker name MRVL. Well, MRVL is interesting stock in a sense that it's finished its previous wave and now it's kind of in inflection decision point, about to start a new wave. And to understand this, let's have a look in general first quickly history of Marvell Technology, and we will understand why it's so. So after having the dip, classical dip at 17th of March of the COVID situation, as many other positively recovering stocks, it started its recovery line and it was showing a very nice trend of recovery, trend 1, which then switched to a bit slower behavior, trend 2 now, and this was also actually followed by moving average 20, which is the green line here. By the way, we have three moving averages, 20, 50, and 200 being green, blue, and red lines correspondingly. Here on the left, you see the depiction of those. So after having actually the dip at 17th of March, it started very nice recovery sequences, using also moving averages as moving average 20 in particular as a support line. So the first big recovery wave was reconfirmed on 11th of May, and then another big recovery wave, again using moving average 20 as support line, was reconfirmed at actually end of June. And now seems like we're starting an older, slower wave. Also, it can be seen that major fast-growing moving averages like 20 and 50 are kind of decelerating, but it's a flat deceleration, so it's not something like decelerating and going down like this. It's more like slowing and then going long steep like that. The second one is usually bearish one. This is one is like accumulation bullish indicator, which is good. And now we see that the last wave went up, suddenly broke, used moving average 20 as support, and then actually went to double support here of moving average 50 and actually of previous two waves depths here in this line. And then we can see that it was in general like volatility situation here, and which is quite positive because if you look to this stock in a sense that it has again recovered and was jumping between moving average 50 and 20 last week, it means it didn't really pierce further. So it seems like here that the final ground was actually found, and it was indeed on this black line, which is kind of volatility. It's not really the baseline for previous waves, but kind of volatility in between lines. But it has shown itself as a strong support line. Let's call it support line 1. So now we ended this week with a doji exactly on moving average 20. Doji is a candle like this with almost no body. It's even more like a cross doji, so very no body, almost doji, which is usually kind of a decision-making inflection point. It might mean two possible scenarios here. First one would be its immediate opening with positive candle, white candle. Then it will be something like this. So it will be like positive upwards behavior, or it might be second scenario. It still might be a small kind of reaccumulation. So it will show a small red doji, real doji with some body on it, and it will stack again between moving average 20 and 50. So if this happens, it will be interesting buy opportunity. And then be mindful, it might still pierce S1 line. Then it will go probably to another defense line here. It will be at this level. This will be S2 line in case of this happening, but it's not really probable. Although always keep in mind the worst scenario as well. So in general, seems like the beginning of the week will be either immediate start, then you should be already in position, or it will be, if it opens below, then you know it will be probably volatiling between S1 line and moving average 20. And this will be good option to enter, because then overall, it is expected that we will have another wave upwards following T2 line, although slower line in comparison with T1 trend. Trend is overall decelerating, so if you are hoping to see several waves here, maybe it won't be the case. We still need to see. It will be then clearly, completely based on catalyst. Usually, if you have moving average 20 working with this scenario, when you're in this point already, it's usually catalyst dependent situation. So if there is any positive news or indication, it will again make another acceleration upwards. So this is situation with respect to the candles. If you look at RSI analysis, you can also see it's actually after going to middle of 50, it now seems like going again upwards, dragging the price higher. But again, keeping in mind that some, let's say, red doji is possible at the beginning of this week, next week actually, with some reaccumulation. And if we look at MACD index, divergent convergence is also very classically bearish because it has made its down wave. Now it's reaching the 0 point, so the inflection, and then it probably will go upwards. And this inflection enrichment could be also coinciding with this red doji. So be careful on that. If happens, it's a good entry point. So overall, Marvell is, let's say, midterm very positive. Long term, it is positive, of course, because it's a classical 20, 50 to 100 stock, meaning it's moving averages 20, 50, and 200 are showing this alignment. And until it is capped long term, it's always positive stock to buy. This is general rule for big companies. For midterm, you need to catch the wave, of course. And as we discussed, the new wave is about to start, so you can catch the appropriate price and then enjoy the surfing of the waves. That's it for Marvell for now. Thank you for watching, and do not forget to subscribe to our channel.